Well, thank you, Chamberlain. Good morning, good evening, wherever in the world you might be watching from. Well, this trading week is winding down. We see the equities market right here in Nigeria. We've seen some positive moves so far for the few trading days we've had in March, and definitely might be setting the tone for the month of March, because we know the month of February was red for the local equities market. But let's get the top stories that set your agenda now. Starting with the oil market, we see oil prices were higher today after U.S. crude inventories rose less than expected last week, and fuel stocks, we saw large drawdowns there, with Brent crude futures reacting to that, up 0.13%, $83.05 a barrel. That's for the Brent grade there. Then we see the U.S. WTI crude. That's the one that we see the Dangote Refinery is buying a lot of at this time, $79.21 a barrel, up 0.10%. But all in all, we'll see oil prices trading within a band right now. So definitely we'll be getting an outlook of where prices will stay in this year, 2024. To other stories now, we see President Bola Tinubu has signed 3 executive orders as his administration seeks to improve the economy and position Nigeria as a preferred destination for oil and gas investment in Africa. A statement by Special Advisor on Media and Publicity, Jurin Galale, says the documents are in line with the president's efforts to remove obstacles to investments in Nigeria, harness the nation's resources, and diversify the economy. And efforts by the government to attract foreign investment appears to be yielding results, as a $350 million hydrogen plant may soon be sited in Kaduna State. The Kaduna State Governor, Uba Sani, says the investment is one of the key successful outcomes of his recent 2-day visit to Qatar with President Bola Tinubu. According to Governor Sani, the visit gave him the opportunity to strengthen existing partnerships between Kaduna State and the Qatari government, as well as a state-led humanitarian organization, that's the Qatar charity. And to some market news now, the Securities and Exchange Commission, in collaboration with the CBN, has developed new rules for digital and virtual asset service providers operating in Nigeria. A circular published by the SEC says that the new guidelines will serve as additional rules and regulations to the existing ones. The SEC has also developed new anti-money laundering guidelines for licensing and ongoing screening of digital vast beneficial owners to ensure that criminals are not registered as operators in the capital market. It can be recalled that the CBN had lifted a ban on crypto transactions in the country on December 22nd, 2023, and issued operational guidelines on virtual asset providers to all banks and other financial institutions. And talking about virtual assets, we see Bitcoin started a decline from the new all-time high of about $69,218. That did not last at all. After touching that level, fell back right down. It crashed to about $59,150 before it trimmed losses, and it climbed back above the 65K level. That's talking about Bitcoin and most of the cryptocurrencies we track there. We see Bitcoin this morning, $66,000, up about 0.43%. Ethereum holding up $3,796, up 0.82%. But we see the big mover this morning, that's BNB, $433, up 5.49%. So we're seeing some bullish sentiment returning to the crypto market at this time. But we'll get more details later on Business Incorporated. Well, talking about the global oil market now, we see Africa's richest man, Aliko Dangote, is planning to set up an oil trading arm, likely based in London. Well, we'll also get a sense of what's happening in the global oil market. Joining us now is Mr. Bismarck Urani, CEO, Financial Derivatives Company. Great to have you on the show. Good morning, sir.
Good morning, Ladi.
So what is the thinking behind the setting up of the oil trading arm for the Dangote Refinery, possibly in London?
The biggest trading companies, commodity trading companies, are usually headquartered either in London, Geneva, and at times in New York. Basically, the largest traders in the oil space are Trafigura, Vitol, and Glencore. But generally, Cargill is also one of the most recognized trading arms. What does this do? What you produce what you trade, and then things get to the consumers, because these markets are highly sophisticated, very volatile, and those traders provide a lot of service so that the end users can buy into the futures market, can buy forward contracts, and can do everything. But I think when you have a 650,000 barrel a day refinery, it is not outside the realm of reason that you should prepare yourself to trade. Even if you don't have your own trading arm, you will have to rely almost entirely on efficient trading companies. So what happens in Nigeria today, the three leading trading companies, like I said, Vitol, Trafigura, and Glencore, they have what they call the refined swap arrangements with Nigeria, where they buy our crude and give us in return refined products at an agreed ratio. That has not been the most efficient structure, the way it's been happening, but really, this is the way to go. And I think it only makes the Dangote complex, that is a refining complex, much more efficient in terms of not having to worry about when prices go against them and when traders try to speculate against them. But definitely, it's something that is a major development. But let me make it clear that in addition to having the trading infrastructure, we also need to have the physical infrastructure. In other words, pipelines from escravos to the refinery and pipelines from the refinery to different depots, not only in Nigeria, but in West Africa. So there's a lot to come. The $25 billion investment now is just the beginning of many things to come. So, like I said, this is a major breakthrough for Nigeria and a major breakthrough for the Dangote Group.
And how does this trading arm play into the plans of, the Dangote Refinery exporting, refined products and also settling local demand?
Yes, there's no question about that. I think the trading arm makes the Dangote Refinery complex much more efficient in terms of you don't have to worry that, okay, maybe I'll have to let me cut my production because the demand is not there. The trading arm will tell you precisely what the future demand for the next 3, 4, 6 months are for 1, PMS, 2, diesel, 3, methane, and all the other things that come out of the fractional distillation column. But to answer your question directly, I think that the Dangote Group will benefit at least, especially in the West African region, so that it doesn't have to worry about what's happening in Ghana, what's happening in Niger, what's happening in Senegal, Ivory Coast, because this refinery has a hub. It's a hub for both West and Central Africa. So it's a major and very positive development for 1, for commodities, 2, for supply, and 3, for prices.
All right, talking about prices now, we see oil prices are up in early trade today. Where are you seeing oil prices in this month of March? And definitely with prices, looking like they want to tend up, definitely that will impact how much the refinery, that's the Dangote Refinery, actually gets this product.
No, I think the forecast for the year is that prices will average at about $78 to $81, that's Brent. And oil markets by nature are very volatile, and it depends on a number of things. Jerome Powell spoke yesterday about at what point in time they would have to start bringing down interest rates in the US. And the moment you start bringing down interest rates, the dollar begins to weaken, and when the dollar weakens, then the price of oil, nominal price of oil, begins to increase. So there are many variables that go into price of oil. But for us in Nigeria, what we are looking at today, the most important variable, apart from the price of crude, is the price of diesel. Diesel, as of this morning, was going at about 14, that is 1,451. It kind of always kind of, it's a proxy mainly for 1, the deregulated price of petrol, and 2, for the value of the Nigerian currency. When the Nigerian currency weakens, the price of diesel depreciates. When it appreciates, the price of diesel actually increases or reduces. So that is one thing that we need to watch, and that has a knock-on effect onto price inflation and food inflation because the logistic costs come in. As you can see from the slides there, you can see that the price of domestic commodities have actually spiked again on the fear that the Naira is about to fall. Our view is that the Naira is not about to crash. The Naira is going to be creeping back. And we see some slight appreciation in the horizon. If that slight appreciation actually manifests itself, I think that you are going to see those prices begin to trend downwards. Why do I say this? 2 weeks or 3 weeks ago, Olam and Flour Mills Premier Feed sent out notices to all the sorghum and maize producers and sellers that they are not going to buy anymore. And from that point, when they put out that resistance, you find that the price of maize and sorghum actually declined by as much as 20%. So we are getting to the point where there's psychological resistance, there's income resistance, and there's actually technical resistance in the market. But that doesn't mean that the prices crash. It only means that the prices begin to move towards their equilibrium value. That's what we are saying.
You did mention Jerome Powell earlier, and definitely we've seen, a lot of chatter about the U.S. Fed, cutting rates sometime in 2024, even though investors globally don't really have a definite time, when that's going to happen. But if it does happen, does it mean that in 2024 we might see a weakness for the U.S. dollar that's against a basket of other top currencies?
Yes, I think clearly you have to understand something. Once it's 3 months to an election in the U.S., which is in November, it will be impossible for the Fed to make any move which will not be politically interpreted as politically motivated. Therefore, I know in the month of March there's not going to be a reduction, but we expect that in the month of May probably and June, we will see a reduction of maybe 25 basis points and another 25 basis points. If that happens, that helps to reduce interest rates, it helps to reduce mortgage rates, and it's a good signal for the voters. As you know, Joe Biden has been facing a lot of pushback as to the fact that in spite of the good economic news, the people do not feel it. Just like in Nigeria, there's bad economic news, there's a bad feeling, and also people are becoming very restive. In the US, they're not being restive, but they are generally unhappy and unenthusiastic. So to answer your question clearly, I think that by June we start to see a reduction in interest rates, begin to see slight weakening of the dollar, begin to see a gradual increase in the price of oil, but not more than the range of $80 to $81 for Brent. And therefore, generally, we are going to be in a generally stable global economic environment, except something unexpected happens in Gaza or in Ukraine. But generally speaking, we expect some stability in this area. If I may use this opportunity to think that if that happens and Nigeria tries to refinance, which I think is almost imperative, refinance some of its external debt obligations, that should give our creditors some comfort. And with creditors, if they have some comfort, then they begin to take another look at Nigeria, because as you said earlier on, the Nigerian stock market has been all over the place like a yo-yo. One, because people are reporting extraordinary losses due to exchange rate translation effect, but also because there's a general sense of apprehension, economic apprehension and anxiety. When this begins to calm down, maybe we'll begin to see some light at the end of the tunnel.
All right, and definitely, I'd like to get a sense of what you're seeing for domestic commodity prices in the month of March. Do we see some kind of stability coming?
What we are seeing is that domestic commodity prices are edging upwards, but there's a lot of price resistance. Two things are happening. One, this new rule about sachets and not selling, because a lot of miniaturization has meant that demand for commodities remains strong because they can buy smaller packets. But now with this miniaturization issue taking place, a lot of suppliers are beginning to say, okay, that means we can only sell in big quantities. Big quantities means you need more cash flow. Because people are under pressure, so we are seeing some resistance there. And therefore, I do not think that you're going to have runaway inflation in the month of March. We're going to see creeping up inflation towards 31%. I think about 30.5 to 31%. That's what you're going to see. But in some particular areas, look at rice. We are seeing it at 80,000. I don't think it can go much higher, although there's Ramadan and Easter this month. Noodles are totally out of reach at this point in time. And eggs going at 4,500, basically almost 200 naira for one egg. So we are beginning to see this, but I think we've got to the point of technical and income resistance. What do I think will happen? The negotiations for the minimum wage is going to get intense. And based on that, and when it's going to be implemented and the date, effective date, those things will play into the price level. For now, we expect prices to remain elevated, but not running away from us as it has happened in the last two months. So the good news is that the rate of increase in prices is going to slow somewhat. But the bad news is that people do not have the income to buy it. And as long as the dollar is it's appreciated, naira appreciated in the last month or so, if it stays stable, then prices remain stable. If the naira falls again, which we do not expect to happen, then it will reflect itself in domestic commodity prices.
All right, definitely. We hope prices don't run away from us again in this month of March. Thank you so much. Always great having your perspective, Mr. Bismarck Rouhani, CEO, Financial Derivatives Company. Thank you so much. All right, we'll take a break now. When we come back, we get a sense of opportunities with fintech startups in Africa for 2024. That's in a moment. Just stay with us. Welcome back. Well, in 2023, fintech startups in Africa raised a total of $1.16 billion, which accounted for nearly 60% of the total funding received. However, this value represents a 30% decline from last year's 2022 fintech funding, about $1.65 billion, which was a 30% decrease from 2021. So if you look at the Africa fintechs startup there, we see the change there down about 30%, $1.16 billion in 2023 from $1.65 billion in 2022. Let's look at the big four in Africa now. Talking about fintech startup, we see Egypt is topping for 2023, topped $541 million. That was raised by fintech startup. South Africa comes in second at $367.17 million. We see Kenya, $301 million was raised by Kenyan startups. Then Nigeria lags there for the top four in Africa, $243 million. But on the flip side, when we look at deals, we see Nigeria topping there for fintech deals in 2023, 60, and that's what we had for Nigeria, topping that counter. South Africa had 25, and we see Egypt there that topped for funding is last there when it comes to deals, 17. But with the value of deals we see there, these 17 deals were quite big. All right, let's take the conversation forward now. George Badijo Adigbenga joins us now, CEO MIM Finance Company, joins us via Zoom. Great to have you on the show.
Thank you. Good to be here. Good morning, Ladi.
Fantastic. So we see funding into Africa has seen a decline from 2021. What do you think is responsible for this? Because we know the battle against inflation, most of the central bankers were raising rates from around that time.
Yeah, the challenge, I think, is global. It's not just focused on Africa. I think we've seen a decline across the globe on the back of the pandemic and other challenges. And I'm hopeful, and I think we're all hopeful, that things will start to come up. As you've rightly identified, whilst the value that went into Nigeria was lower than some other African nations, we had more deals going on. So there is this challenge in terms of the availability of investment for other reasons that's got nothing to do with Africa. But it's still reflective that in Nigeria, we're still doing more deals than everywhere else. It's a large nation with loads of opportunity. And when things bounce back, I think we'll see those numbers we saw before.
All right, with the merging of FX markets in Nigeria, we've seen some companies declare large FX losses, with most of the results we've seen so far. How the fintechs, that raised funds in dollars, how are they managing, all of that? Because at the end of the day, they had to earn, in the naira.
Mm-hmm. Very, very challenging, very tough, I would say. And our business, M&M Finance, has been subject to those same challenges where we raise funds in FX, and as a result of the naira devaluation, when it's time to repatriate back to our investors, the currency is so weak that no matter how well your business has done, it's not a good investment for those bringing money in. So it's very, very tough, and there are different ways that we're all looking at to edge, and edging is also very challenging at this point in time due to the volatility. However, there are many other ways that we're looking at that perhaps would allow us to kind of carry on doing the good we do in the country.
And definitely we see, most of these startups, they go on to raise Series A, B, C, and D. What are you seeing for startup funding in Nigeria for 2024 with what we've seen so far?
Well, I think the opportunity is there. If you look at the so-called runaway inflation that is actually affecting a lot of people, we can but only rely on the likes of our kind of business and other fintechs that are pretty much striving because they bring a solution that addresses perhaps inefficiency and accessibility challenges. And I think that is what investors will be looking at, opportunities to solve big problems. The inflation you see today, I'll give you a very good example. You can go to a shop today to go buy a TV, and the price is probably 200,000 naira. If you decide to save to buy that TV in 6 months' time, that TV could be costing 1 million naira. And I think this is where likes of M&M Finance comes in to kind of allow you to edge by providing you the funds you need now to buy the TV at a fixed price based on what you can afford, and you can then spread the repayments over a period of time. And I think this is where fintechs are now playing to kind of solve a lot of problems, and this is going to attract investment, whether it's Series A, B, or C, for those kind of business to grow.
And definitely, it looks like it might even get tougher, to get funding for a startup, because we know most of the time it's quite risky. But as a startup, in 2024, how do you make yourself attractive to investors?
Well, firstly, you need to be able to create a solution that would give them confidence that they would get the return on investment. The FX challenge is really, really tough. And as I said, there are ways around it. And I think coming up with different ways to make them believe that there would be a return. And I think another very important point when you're making your proposition to investors is try to find investors that are there for the long term. Investors that want to come in within a year, make their returns, isn't really going to work. But I think those with the long-term view that do have the greatness of Africa in their mind would definitely do well, but it would take time because we need to kind of navigate through this turbulence time. And I think there is definitely light at the end of the tunnel, but it is a global crisis. That's another point to kind of make. And for emerging countries like Nigeria, it's even tougher on us.
And, talking about the FX, at the end of the day, is it still wise to go and get funding, in foreign currency? Is it better to start looking inward here and try to get your funding in naira so that, whatever happens, even though you do business and earn in naira, you're still good? But we've seen the MPC raise rates by about 400 basis points here, and Egypt raised even bigger, about 600 basis points. So capital is looking quite expensive in Africa.
It is. And looking for local funds is great. But, country would not grow, an emerging country would not grow without foreign investors, right? Foreign companies and investors putting money in. And we just need to find a way to make the deal attractive. Of course, this FX challenge needs to be addressed, and we believe that the government is doing everything they can. I do not believe they're sat down doing nothing. This is a crisis. However, it's important that, yes, we find local funds, but also we find a better proposition for people to be able to invest in Nigeria. Very important. Very important.
Definitely we'll be tracking to see how much investment we get in 2024. That's at the end of 2024. Thank you so much for coming on, George Badejo Adigbenga, CEO, MIM Finance Company. Thank you so much.
Thank you for having me, Ladu.
All right, we'll take a quick break now. When we come back, we head straight to the markets. Just stay with us. Welcome back. Well, let's get a sense of how your money performed yesterday in the local equities market. And we see it's a green close. Again, 99,591 points. That's for the all-share index, inching back to that 100,000 psychological level at this time. 0.40%. That was the close yesterday. Equity cap sitting at 56.31 trillion with an added 227 billion naira. Let's look at the trading, the sectors we track right now. We see just the banking counter there. That was in the green yesterday, 0.24%, with some of the tier 1 banks and tier 2 banks adding to their share price. Consumer goods down 0.83%. We see industrial goods was unchanged yesterday, and insurance didn't follow the banking counter there. It's down 0.15% yesterday, and the oil and gas counter, that's unchanged. Let's look at other trading activity now. We see volume 4.61% more than we had in the last trading session, but we see value and deals down. Deals almost getting to that 10,000 level, but had to close at 9,338. Let's look at the top trades now. We see Transcore. Yeah, Transcore again, topping the trades by volume, 67.34 million units of stocks traded yesterday. FBNH, that's every minute 47.69 million, and GTCO, financial services, 37.47. That's the trade we had for GTCO. Let's look at the fixed income market now. We see the from FMDQ Security, we see the bond trades there. The 2042 January, that's had about 4 deals at 6 billion naira. Then for the 2028 February, we see 6 deals. That's the highest deals we had right there. But the total number of deals, 23. So we're seeing a lot of attention coming to the fixed income market at this time, seeing with the rates there, about 400 basis points MPR hike there. So we're seeing the fixed income market getting more attractive at this time. And we see for the March 2024, that was valued at 19.23 billion naira. Just 2 deals there. That's for the almost security. So definitely looking out for how the local equities market closes today. Maybe we might have a positive week. That's by the last trading session tomorrow. So that's how it's looking right here in Lagos, Nigeria, talking about the markets and business so far. So now I'm going to hand things over to the Sunrise Daily team. Thank you so much.